All right, hey guys. In this video, I'm going to go through the four most common questions that I get as a professional trader. And this is going to be an in-depth guide, an in-depth analysis of my 5 rule system, how to use it, how to find setups, how to find stocks that fit it. Once you get into the system, how do you manage it? And then what to do from there. Again, there are 4 key questions that I always get from people who are interested in trading, who are new to trading. I'm going to go through and answer these in a little bit of detail. Hopefully, it can help you guys who are struggling with trading, who are new to it, who want to get started on this journey and provide some value to you from an experienced trader with more than 10 years of profitable trading experience, verified 8-figure trader. The next question that I often get is, you know what to buy. How do I know when to buy? When do I want to take a position? When do I take a position? When do I enter a trade? This is where my 5 rules come in. This is where my 5 rules come in to help you find entries. We're going to go and we're going to look at Lockheed Martin. Lockheed Martin displays all 3 trades that we talked about. Price had a strong run up in 2024, topped out, lost the 200-day moving average, fell, couldn't get back above it, fell, found a level of price support, and then reversed and got back above the 200-day moving average. How would we know when to enter this trade if we're looking for breakouts? The first thing you look for is a level of price support. This is my first rule. The first thing we look for is relationship to the 200-day moving average. Is price above the 200-day moving average or below it? Looking here in December of 2025, price had gotten back above the 200-day moving average, fallen back below it, and was trying to recover. So that's one. The second one, we want to see a level of price support. Price support is defined as 3 interactions across 3 different weeks from one direction and 1 interaction from the opposite direction on another week. We basically want to see 3 interactions at a level from above and 1 from below, or 3 from below and 1 from above. This signals that there are institutional investors who are interested in purchasing this stock at this level. On LNT here in December of 2025, around the 443 level, we have 1, 2, 3 interactions from above. And then if we go back historically, we have a level from below August 25. And then if you go back even further, look, we can see multiple interactions at or very close to this level. This forms a good level of price support. Hey guys, look, this clip is just a glimpse of the kind of research, education, and training content we do in the Construct every single day. To see the full version of this training and unlock over 100 hours of trading and investing educational content, join us inside the Construct. I'll show you exactly how I leveraged these tools and techniques and my strategy I used to retire at 35 while working a full-time 9-to-5 job, working over 60 hours. From daily live streams to proprietary research, it's all waiting there for you, including a supportive community of like-minded traders and investors just like yourself. Use the link in this video to start your free trial in Construct today. Price. Hey guys, look, the next thing that we want to see is we want to see higher lows. We want to see price across at least the weekly charts, at least 5 trading days apart, making higher lows. In this case, we have a low here at 434. And the higher lows, you need to see higher prices across multiple weeks. But what you also need to see between those higher lows is a lower high. Higher lows and lower highs occur in tandem. When you have 2 levels that look like they are higher lows or stable lows, you use the highest price, in between those 2 lows as one of your lower highs. On the LMT chart here, we can see here on 10 November, Marine Corps birthday, and then on 25 November, price made a low, moved up, came back down. Initially looked like this level was going to hold. This was going to be a potential higher low. We would use 18 November. This is the highest point between those as your lower high. And here's your 2 lower lows. However, price didn't hold it. It did lose that point, ultimately recovered above it. We still have a lower high here. This looked like higher lows, but then beginning in December, it lost it and quickly recovered. Then we want to look for a new level of higher lows. We use December 1st, price moves up, comes back on December 10th, tries to make a low price, holds it. Here's a low, here's a higher low. We look at 9 December here, To walk through the 5 rules that I used to look for entries, we're going to look at the PCG chart. This is Pacific Gas and Electric. The 5 rules that I look for, the 5 rules that I use to find setups and take entries. 1, we have the 200-day moving average. 2, we have price support. 3, we have higher lows. 4, we have higher highs. And then 5, we have a diagonal. We have a trend line break, either a diagonal or horizontal. We're going to look at the PCG chart here. Again, this is Pacific Gas and Electric. The yellow line here is the 200-day moving average. Based on this diagonal break here, which would indicate our entry point, what do we have? We have the 200-day moving average. Looking at the chart here, let's make this a little simple. Let's say we're looking at, based on the chart here, we have a level of price support here around 1476. Price support is defined this way. You want to have 3 interactions with a level of price from one direction and at least 1 from the other direction. All of these interactions need to occur at least 1 week apart. You could have 3 from above and 1 from below, or 3 from below and 1 from above. At this 1475, 1476 level, we have 1, 2 interactions here, and then we have 1 back here on August 25th. Interaction from above, and then from below. Are we seeing price when it gets below that level move up and reject it? Yes, we do. Here at 10 June, and then here around September. This is a sign that institutions are active at buying and selling around this level. Ideally, your interactions are very strong, and that means you have price touching it and then moving sharply. You would have wicks on the daily chart. Down here at 1430, down here at approximately 1420, this is a very good example of a strong price level. We see we have interactions, but we don't have closes around this level. Price touches and then moves sharply, touches and moves sharply. And then when it's below, same thing, touches and then moves down, touches and moves down. Either institutions are buying or selling right around this level. And then when price does close, and then when price doesn't have an interaction at this level, we have a big move through it. You either have wicks at the level or you have strong candles through it. This is a very good price level, a very strong price level. And then we have another price level at 1475. The next piece, we have higher lows and higher highs. For higher lows, again, we want to see them across weeks. We want to see price be higher on at least the weekly level. We have our price support level here at 1474, and we're seeing here's a higher low, here's a higher low. Price is moving up. Then we have higher highs. Here's the thing with higher highs and the trend. Those are the last 2 pieces. Your higher highs have to be a part of your trend, whether it's a diagonal or a horizontal. Your higher highs have to interact with that trend. On this chart here, we see interactions right around the 1616 level. We see interaction right around 1670, one around 17, and then going back here to, I think is all-time highs. Nope, it's not. Going back here to this level at around 2150. Those are the basis. Those are the interactions that form our trend. And these are part of our lower highs when price is going down and will be our higher highs as price goes up. That forms our diagonal, and we have the 200-day. Those are the rules. When would you take an entry? In order to take an entry based on my system, you need to meet at least 3 of those criteria. Of the 5 rules, you need to meet at least 3 criteria. If you only have 2, you can't take an entry. Here, for example, in the end of January 2026, price is at $19. We have a level of price support, and we have maybe higher lows. There's only 2 criteria. You can't take an entry here. Here on 3 February, price had gotten above, it opened above the 200-day moving average. We have higher lows and we have a price support. You could have taken an entry here. Price crosses in the same day, price crosses above the diagonal trend. You could take an entry there. You have 4 of the 5 criteria. And then finally, what would have been a higher high, let's mark it here. A true higher high would have occurred on 6 February. On 6 February, we meet all 5 criteria. That is when you take a full size position. And according to my 5 rules, you meet all 5 criteria, you take a 5% position. If you meet 4 of the 5 criteria, you take a 4% position. If you meet 3, you take 3, a 3% position. If you meet 2, you don't take anything. As the setup evolves and as the potential gets better, you add more weight to the position. But it also allows you to get in a little bit early. And then if you look and see what the chart did from that entry point, had one day where it checked the level and then it kept on moving. Now, according to these criteria, using these 5 rules, where would your stop loss be? In this case, you have 3 potentials. Ideally, these all happen at the same spot. You have the 200-day moving average could be your stop. That's your higher point here. You have your most recent higher low, which would have been right here around $15, or your level of price support at $14.75. The best setups have price support, higher lows, and 200-day moving average all at the same spot. In general, I want to use the highest of my stops so I can get the tightest risk possible. That's how you use the 5 rules to enter trades. We're looking for the 200-day moving average. This determines general sentiment, and if this is a reversal, breakout, or continuation. Price support, higher lows, higher highs, and then a diagonal or horizontal trend break. When you meet all 5 criteria, that's a 5 of 5 setup. You take up to a 5% weighted position. If you want to see,
hey guys, look, don't trade with half the information. This video is a shortened version of a much deeper and thorough training session that we did inside the construct. If you want to get access to the full video, plus our education vault of over 100 hours of content, including daily interactive live streams, join our community. Inside, I regularly share the exact blueprint that I use to bridge the gap from working a 9-to-5 job, full-time trader. Inside, I share the exact blueprint that I use to bridge the gap from full-time career to fully retired at 35, now being able to have complete control of my time and freedom and trade anywhere I want to in the world, supporting all of this possible through trading. Click the link in the description below and start your free trial in the construct to get the full story and see if we're the right community.